So good morning, everyone. Welcome to today's webinar, Going Global, How to Handle VAT when selling physical goods to European Union customers. So welcome, this is a very interesting topic. I can't wait to listen what Michaela has to tell us. My name is Malin Janovu, and I'm the Business Development Manager for International Trade at Thames Valley Chamber of Commerce. And if you never heard about Thames Valley Chamber of Commerce, we are the accredited Chamber of Commerce covering Berkshire, South Buckinghamshire, Oxfordshire, Swindon, and Heathrow. And before we start, I would just like to state that today's session is being recorded. The recording of the session will be made available on our website, www.thamesvalleychamber.co.uk. If you wish to send us any questions, please do so by using the Q&A facility, and we will cover some during the session. Otherwise, we will answer following the webinar, depending on how many they are and how complex. I want to introduce you to our speaker today, Michaela. Michaela is a sales manager in SimplyVAT business development team. SimplyVAT? SimplyVAT.
I say SimplyVAT, yeah.
It's SimplyVAT, but it's not that simple.
No.
Over the last 6 years, Michaela has helped hundreds of UK businesses to expand their business operations compliantly by educating and advising them on their VAT obligations and requirements in Europe, and by finding the right compliance solutions based on every seller's unique business setup. More than that, Michaela is a VAT expert with a sense of humor, which makes her even more special. And she's a human, she's not a robot, and she knows about VAT. So I know that she has a lot to tell us, and I'm looking forward to learn from you, Michaela. So welcome, the floor is yours.
Thank you. Thanks for that introduction. And yeah, no pressure at all. So I'll just share my screen and then we'll get started. Okay, so hopefully everyone can see my slides. If not, please do shout. So hi, good morning again. My name is Michaela. I may have spoken to some of you before. So yeah, today we'll be talking about VAT, especially when selling physical goods to EU customers. I know this is a really complex topic and I know it's the hottest day of the year, so apologies, but hopefully it'll be very helpful. We obviously only have so much time, so I've tried to cover as many different topics as possible. Yeah, I appreciate that, I can't fit everything into 1 hour session. So in terms of the agenda, oh, there it goes. See, even my laptop was a bit slow this morning. So in terms of the agenda, we'll start off just by thinking about kind of the current landscape post-Brexit, kind of the key changes, key things to keep in mind. We'll then focus on selling to EU consumers through your own website, whether that's goods located outside the EU or inside the EU at the point of sale. We'll speak a little bit about rules when selling on online marketplaces, so the likes of Amazon, eBay, etc. I know that's a very popular topic out there at the moment. And towards the end, we'll be talking a little bit more about selling to EU businesses, once again, when the goods are located inside the EU. And I've also got a couple of slides on reclaims of VAT, whether you're purchasing or importing your goods into the EU. So yeah, lots of information to go through. So first of all, as you know, Brexit has been very chaotic for absolutely every business out there, especially UK businesses, because you now kind of have to comply with a completely different set of rules when selling in the EU. Some of these rules are, of course, very different. Others are completely the same. So it's just really tricky to stay on top of everything. One of the key changes and something that's still causing a lot of issues for a lot of our UK clients is because there's now a hard border between the UK and the EU. What that means, import procedures do apply when you're importing your goods into the EU. which of course may result in higher shipping fees, customs charges, more red tape, and VAT registrations, depending on how you're trading and what the flow of the goods is. Secondly, especially for your consumer supplies before Brexit, you were able to have your UK warehouse and just send to your customers in the EU, as long as you were under certain thresholds. Happy days. This is no longer different. So when you're selling physical goods to EU consumers, these supplies are now taxable in the EU member state of destination. So you're not only looking at, okay, where's my goods, where's my warehouse located, you're also looking at where are my customers located. And you must ensure that you're collecting the appropriate VAT rates based on the country where your consumer is located, if of course that's something that you need to comply with. If you are selling on online marketplaces, once again, the best example of this here is Amazon. There are certain cases where the VAT liability, where the VAT liability will shift from you to the marketplace. So in some cases, Amazon will deal with everything in terms of the VAT collection on your behalf. In other cases, you will still need a VAT registration, but Amazon will continue with the tax collection. So very important that you understand if these cases do apply to your business or not. So, golden question, how do I know where to tax when selling to the EU? I wish there was a really simple answer. Unfortunately, it's a little bit more complicated than that. There are about 4 key questions. So if you're doing some research, you're talking to a tax advisor, we will be asking you questions to determine these 4 areas. So the first of all, which seems very basic, but sometimes can be a little bit more complex, what is the precise nature of the taxable transactions? i.e., are you supplying goods? Are you supplying services? Is a combination of the two? We see that happen quite a lot as well. Secondly, it's very important that you understand who your customer is in the EU. So are you selling to businesses? Are these business buyers registered for VAT in their countries or not? Or are you selling to consumers, so private individuals? It's also absolutely crucial that you understand and think about your supply chain from start to finish. So where are the goods located at the point of sale? Where are they delivered to? How are they delivered? Who's responsible for, let's say, customs of being imported? All of these little things you need to keep in mind. And lastly, as I've mentioned a few times already, who needs to account for the VAT? Okay, so especially with B2B supplies, sometimes it is your customer who's responsible to account for the VAT. Other times it's yourself, and for B2C supplies, it could also be the marketplace that you're selling on. So we'll be covering all of these aspects throughout the presentation. Now, I know this can sound quite overwhelming and we've only just started. So just to let you know, there are a few simplified schemes called the one-stop shop schemes available. These really only apply for B2C supplies at the moment, but we'll be looking at 2 today. So we'll be looking at the import one-stop shop scheme and the union one-stop shop scheme, because both of these look at the supply of physical goods to consumers. I'm not going to focus on the non-union one-stop shop scheme because that's all about services. So if you do supply any services to consumers, you can get in touch with us after the presentation. We can have a one-on-one conversation there. So, as I said, we're going to start with consumer sales and then we'll look at B2B supplies towards the end of the presentation. So, the best way to think about it is really to follow the flow of the goods, in my opinion, because otherwise it gets really overwhelming. So first of all, let's see what happens if your goods are located outside the EU at the point of sale. So this is, you could have your UK warehouse and you're shipping through your own website to consumers in the EU. Okay, this is kind of what we're talking about here. So a few more questions that you may want to consider in terms of understanding about liabilities or the questions we would be asking you. So first of all, how is the product sold? Is it sold through your own website? So website powered by Shopify, eCommerce, Magento, or are you selling on a marketplace like Etsy, eBay, Amazon? You know, there's so many marketplaces out there these days. Who's the importer of record? So when the parcel is delivered to your consumer in France or Germany, who's actually dealing with the customs? Is it you? Is it your customer? And the third question you need to be thinking about when the goods are outside the EU at the point of sale is, what is the intrinsic consignment value? And we'll cover what that actually means in a second. So if your goods are outside the EU at the point of sale, you are selling to consumers through your own website, the import one-stop shop scheme is a really good scheme for you guys to think about and to consider. is a scheme that's already used by thousands and thousands of businesses out there. So the import one-stop shop scheme, first of all, is an optional scheme. So some carriers will say to you, you absolutely have to have it. From the legal point of view, you don't. It is an optional scheme, but it's got plenty of benefits. So it's always something that we would recommend if it applies. Essentially, what it does, if you register for the import one-stop shop scheme as the supplier of the goods, it means that you don't have to register for VAT locally in all of the countries where your where your customers are located. And you also don't have to pass the VAT charges to your customers. So it's a really nice scheme because you just get one registration. It's valid on your imports throughout the EU. And essentially, you don't have any additional charges at the border, and your customers don't have any additional charges at the border. So it really provides that really, really good customer experience. It's as if they were buying from an EU supplier. Essentially, this is the whole point of the scheme. The import one-stop shop scheme can be used to report what we call distant sales of imported goods. So this is essentially consignments shipped from a non-EU location where the consignment value does not exceed €150 threshold. And I'll cover what actually goes into that threshold in just a second. Okay, so what the import one-stop shop does, once again, you just collect the VAT, the sale VAT from your customer at the point of checkout. Once again, the VAT rate you're collecting and charging is dependent on where the consumer is located. So if you have a German customer delivering Germany, you're collecting German VAT. If it's going to France, French VAT, etc. And you then basically remit the VAT through a single monthly iOS return and iOS payment. Okay, so it's one registration, one return, and one payment on a monthly basis. The one thing to consider as a non-EU business, you will need to appoint an iOS intermediary to register for the scheme. So essentially what that means, you can't register yourself. You have to go through a company like SimplyVAT that's actually recognized to act in this capacity. All that means is we become liable for your returns and the VAT declared. So we take on some liability on your behalf. Now, I've mentioned this consignment value of €150, and it's really important that you get this right. So essentially what we're looking at, because we're looking at the consignment value, we're looking at the value of the whole package. So the goods packed together and dispatched together to the same client. We're not looking at the individual value of every single parcel, every single product in a parcel. If you are shipping, or you received an order for 3 or 4 items, it's the combined value of the whole parcel. So what the intrinsic value of €150 is, it's the price of the goods themselves when sold for export to the customs territory of the European Union. It excludes transport and insurance costs, unless these are included in the price, and also excludes any other charges or taxes. So essentially, it's the price the customer has paid to you for the order at the point of sale. It's not the cost price. It's not what you paid to your supplier in, US. It's the price the customer pays, and it's the total combined value of the order, of the consignment. What's important to note, however, is that the VAT is still applied on the total value of the sale at the checkout. So if you are charging a set amount for your products plus shipping, we don't take shipping into consideration when thinking about whether the consignment applies for iOS or not. But if it does apply, shipping will also be taxed when we do the return. Okay, so this is something to keep in mind, just to make sure that you are thinking about your profit margins and pricing strategy the right way. So what happens if the products or the consignment values are exceeding this threshold of €150? This is a very common question. We get clients who sell products who really range from, let's say, €20 to €200. Or sometimes you may get a customer who just loves your brand. They purchase, they make one order and they purchase 5 products in one basket, and that may push that consignment threshold up. Well, in that case, we're going back to normal customs procedures where VAT is due upon importation. And essentially, whether you need to do anything or not, here, if the goods are outside the EU at the point of sale, with that consignment value exceeding €150, depends on the commercial agreement between you and your customer. So the question here is, who is the importer of record? Are you the company that's dealing with the customs when the product is delivered to, let's say, Germany, or are you passing that to your customer? If you are the importer of record, so you're shipping with the DDP Incoterm, you will be required to register for VAT in the country of importation for B2C supplies. Okay. If you choose to ship DAP, so your customer is responsible for these charges, you're not required to have a VAT registration in place, but of course, this can lead to a poor customer experience, especially if your clients are not aware that they'll have those extra fees at the border. So something to consider. Now, we've looked at what happens when the goods are outside the EU at the point of sale. So we'll also see what the rules are if your goods are located inside the EU at the point of sale. I fully appreciate that sometimes monitoring these thresholds, if you've got a really wide range of products, it's just easier to perhaps find a 3PL provider in the EU, import everything in bulk, and then have the goods closer to your customers. So important to understand what the liabilities are there. So first of all, and I am simplifying this, if our consultants heard me, they would be shaking their heads. But one of the golden rules to kind of think about is if you are holding inventory in an EU member state for selling purposes, you will need to register for VAT in the country or countries where the goods are dispatched from. Okay, so if you're looking to engage a 3PL in Germany, have your goods in Germany at the point of sale, you will need to have a German VAT registration. That's your first requirement, but it's not the only requirement, unfortunately. What the German VAT registration will do, it will help you to account for any local sales. So let's say from the German warehouse to your German customers. It'll help you to account for any imports or purchases from your EU suppliers, which I'll cover towards the end. So yeah, lots of things happening on the local level already. But as we said at the very beginning, when you are selling to consumers on a B2C level in the EU, you must charge VAT based on the destination country, so where the customer is located at the when they're located. So if you have your goods in Germany and your customer is in Italy, you need to charge and collect Italian VAT, right? The German registration won't cover this sale because the German registration will only look at stuff that's sold within Germany locally. So what do you do there? Well, there's a couple of options. So the second requirement is essentially you either register for VAT in all of the different member states where your consumers are located. So you'd have your German registration and then all these different local registrations throughout the EU. But quite frankly, that would be very, very expensive, a lot of admin to go through. So, you know, be my guest, but I would not recommend, to be very honest with you. The second option you have to simplify this is you can apply for another simplified scheme called Union One-Stop Shop Scheme. Okay, so Union One-Stop Shop Scheme sounds exactly the same as the Import One-Stop Shop Scheme. I'm very aware, but it does a very different thing. So once again, as we said, Union One-Stop Shop is an optional scheme. You don't have to have it, but you know why you wouldn't, not quite sure. And as a non-EU established business, what it does, it allows you to report the VAT due on your cross-border B2C supplies. So it only applies to B2C sales that are going from one EU country, Germany, to another EU country. So we're looking at cross-border supplies here. As we said, it's an alternative to having to register for VAT in all the member states where your consumers are located. You can register for the scheme in any EU country where your goods are dispatched from. So if you're only looking to store your goods in Germany, you'd get your German VAT registration and your one-stop shop scheme in Germany. And then you submit a quarterly one-stop shop return and make a quarterly payment for the VAT collected on your cross-border sales. So once again, the simplification here is that it's one registration, one quarterly return, and one quarterly payment. If you're thinking of having your warehousing allocations in 2 or 3 different EU member states, you can then choose where you want the OSS registration to be. It would have to be one of the 3 member states in this example, but it doesn't matter which. Okay, there are perhaps some logistical considerations to make, but you know, they all do the same things, and technically speaking, they are available for registration purposes in every single EU member state. Lastly, very important, Because this is a simplification scheme, it's not a scheme on which you reclaim anything. It really only serves the purpose of reporting the VAT collected at destination on your cross-border B2C supplies. Any reclaims that you have, your import VAT, your purchase VAT, typically you'll be required to have a VAT registration, so you do that on your VAT registration locally, not through the Union One-Stop Shop. Okay, so I know this is a lot of information coming at you at a speed of light, but we'll move on to what happens when you're selling on marketplaces in the EU. Once again, we're still staying with the consumer supplies here. So when selling to the EU via marketplaces, there are two cases where these marketplaces become what we call deemed suppliers for VAT purposes, okay? The first case is essentially where the goods are located outside of the EU at the point of sale with the intrinsic value not exceeding 150 euros, okay? So in this example, as a UK business, you could have your goods in the UK, you're selling to consumers via Amazon, and the consignment values are below 150 euros. The reason why the marketplace is liable here is essentially Amazon will use their own import one-stop shop scheme to collect, remit, and pay the VAT to the tax authorities. So they should be sharing their own IOSS number with you, and you should be putting that on the customs declarations in a secure space. Okay. With this first case, where the goods are located outside the EU at the point of sale, not exceeding 150 euro threshold, sold through a marketplace, you do not need to have your own IOSS number for these supplies. You would only need your IOS number for any own website sales or any platforms that are not acting in this capacity as deemed suppliers. The second case, which is a little bit more interesting, is where the goods are located in the EU at the point of sale and they are sold by a non-EU seller. So as a UK business, you could have your stock in Germany. Perhaps you want to utilize the Amazon's FBA solution, and you're selling to consumers via Amazon. Amazon is responsible for the collection and remittance of the VAT on these supplies. So you need to make sure your prices are still inclusive of VAT, but they are doing the actual collection and remittance. However, as we'll see in a case study in just a second, you will still be required to have a VAT registration in the country or the countries where your goods are located at the point of sale. Okay, so you don't need your OS registration here because Amazon's dealing with that through their own OS registration, but you still need to have your own VAT registration if the goods are in the EU at the point of sale, sold via marketplace. Now, one thing I would recommend here is, we know these big companies like Amazon, they're acting as deemed suppliers, but of course, there's so many different marketplaces. So if you're looking to engage with a platform, always check the terms and conditions and ask them if they are acting in this capacity or not, because really only they can tell you whether they are taking that responsibility or not. It's really difficult for yourselves or even ourselves to kind of know that. So as I said, I do have a very quick case study to have a look at. This is probably like one of the most common examples of questions we get for our e-commerce clients. So we would have a UK established business looking to expand on Amazon, and what they want to do, they want to do FBA in Germany. They'll be bringing the goods into Germany from the UK, and they will only be selling on Amazon in the EU. So essentially, there's a couple of different things that this UK business would need to consider. First of all, they will need to register for German VAT, and they would need to obtain an EU EURI number. Now, this EURI number is a bit of a grey area because some customs authorities have a slightly different interpretation of who needs it and why. But the best guidance, and a lot of shippers will ask you for this anyway, is to get your own EU EURI number. Germany does not issue EURI numbers to non-EU established businesses anymore, but we can get you let's say a Dutch EURI number and link it to your VAT number. That's also very possible. When you bring your goods into Germany, you'll have to pay import VAT and import duties, if applicable, at the German border. but you can reclaim this import VAT through your German VAT registration when you report the import that you have. So that money in terms of the import VAT isn't lost. It can be recovered if you've got the right customs documentation, the right tax details, etc. And what you also have to do, and this is why you need to have that German registration in place, you essentially need to report the VAT exempt sales between you and Amazon. Okay, so Amazon does the collection remittance of the VAT, but you have to say to the German tax authorities, hey, I've made all these sales through Amazon in July 2025. You're not paying any VAT, it's just a reporting responsibility. Okay, so once again, in this case, you just need your EURI number and German VAT registration. You would not need the one-stop shop registration if you're only selling on Amazon, because Amazon will use their own one-stop shop number for the sales being made. Okay, so a slightly more complex topic, but my favorite, I would say, business to business supplies in the EU. Once again, I could sit here for 5 hours, but I know we don't have 5 hours and you do not want to be sat here with me for 5 hours. So I'll try to whiz through this quickly, but in a simple way, hopefully. So once again, B2B, I wish there was just 1 or 2 golden rules where I can tell you, if this is what you do, you need a VAT registration. Unfortunately, with B2B registrations, it's a little bit more complex because the way it works in the EU is, although the EU has one overarching set of rules, every EU member state is able to interpret those rules in a slightly different way. So what may be the case in one country will be completely different in another country, even if you're selling in the exact same way. So this is why with B2B, typically, we just need a little bit more time to kind of ask the right questions and establish the VAT requirements. What I thought would be helpful, however, is just to put some common examples on the screen in terms of this is typically, where VAT registrations are required if you're selling on a B2B basis. But of course, if you have any questions on your setup specifically, get in touch with us after the presentation and we can have that one-to-one conversation. So if you're holding inventory in an EU member state and you sell to businesses within the EU, so you have your German warehouse and you're selling to business buyers throughout the EU, you will 100% need the VAT registration in the country where the products are located. So in this case, Germany, okay? However, if you're holding inventory in an EU member state and you're only selling domestically, so perhaps you have your goods in a Dutch warehouse, but you're only selling to business buyers with deliveries in the Netherlands, whether or not you need a VAT registration will depend on the rules in Netherlands or Italy or France individually. So if it's domestic, you need to check the rules. We can help you with that. If you have a warehouse and you're selling throughout the EU, you need to get the VAT registration. No questions there. If you are purchasing goods from an EU supplier, but you're selling these goods to an EU business customer, especially if the goods travel from one EU member state to another EU member state, you will also need to have a VAT registration, typically in the country of dispatch, but there's some leeway in certain cases where it can be the country of arrival. You just need to report the transactions the right way. If you're moving your own inventory between different EU member states, so perhaps you've got stock in France, you've got stock in Italy, and you have those stock movements going in and out. Stock movements are essentially B2B transactions. It's just that you're selling the goods from yourself to yourself, okay? There's no VAT to pay, but those stock movements must be reported to make sure that the EU can stay on top of what's being moved throughout the EU. There's no fraud. So once again, it's more of a reporting exercise rather than you having to pay any VAT there. If you're importing goods to an EU business customer and acting as the importer of record, VAT registration is likely to apply. It will depend on the country of importation. So for example, in Germany, VAT registration will be required. In countries like, let's pick a good one, Netherlands, for example, depending on exactly who your customer is, are they actually established in Netherlands or not, you may not need the registration, but we'll cover that in a minute. And we see this a lot. If you're engaging in triangulation or chain transactions, you will need to have an EU VAT registration somewhere in the EU. Before Brexit, you were able to use your GB VAT number to engage in triangulation, and you didn't need an EU VAT number because your GB was an EU VAT number. But post-Brexit, what we see quite a lot, we see a lot of customers engage in triangulation without the VAT numbers because they just haven't realized that the rules that applied before Brexit no longer apply. So you need to have a VAT registration for triangulation chain transactions. God, that's a mouthful to say. Okay, so let's just go through some of these principles in a little bit more detail to hopefully clarify this for you. So first of all, domestic B2B transactions. So what this is essentially when you are supplying goods to a business buyer where the dispatch and the delivery of the goods happens within the same member state. So you've got your French warehouse and you're supplying to a business in France and the goods are staying in France. Okay, this is a domestic B2B sales because the goods are in France, they stay in France, they do not leave France. Now, there is a common misconception that B2B supplies, especially locally, are exempt from VAT. Sometimes this is the case, but not always. So don't just assume that, you know, because your friend's doing it and they don't have a VAT registration, they may be doing it in the right way, but sometimes they may not. So always get it checked by a professional. Essentially, in order to determine the correct VAT treatment for your domestic B2B transactions, i.e. whether you need to charge VAT or not, you need to consider what we call domestic reverse charge rules. So this tells you what the French interpretation of the general rule is and what the German interpretation of the rule is. If the domestic reverse charge applies on the supplies of goods, there's essentially no VAT to be charged by a non-resident supplier. So France is one of those countries where the reverse charge mechanism applies. What that means is if you have your goods in France as a UK business, you're a non-resident supplier, you're using the reverse charge, it means your business buyer is required to self-account on the VAT for the VAT on their own return. So you wouldn't charge them VAT on the domestic B2B transactions, even if you had that French VAT registration already, okay? If the domestic reverse charge does not apply, Germany here is the best example. The supply of goods will be subject to local VAT, and you, the non-resident supplier, will be required to register for that locally. So what this means is if you have your German warehouse, you're selling to your business buyers in Germany, goods stay in Germany, and because you're a non-resident supplier, you are required to charge German VAT on the supply and obtain a German VAT registration to do that, okay? If you're engaging in these sales without the VAT registration, then best to get that one sorted as soon as possible. Intra-community supply of goods. So these are different. So when we talk about intra-EU supply of goods, really we're looking at the movements where goods are being supplied to a VAT-registered business. They are being dispatched from one EU member state, so for example, Germany, but the final delivery is outside of Germany, but within the EU. So essentially the member state of dispatch and arrival are not the same. Okay, so an example of this, you have your stock in Germany and you are selling and shipping to a business buyer in Spain, okay? This is an intra-community supply of goods if your buyer is registered for Spanish VAT. Now, this is actually simplification because if the buyer gives you their VAT number in the country of arrival, you are able to zero rate the transaction, okay? So in this case, where the goods go from Germany to Spain, your Spanish buyer will give you their Spanish VAT number. You check it in VICE, which is an EU database. It's all active, happy days. You don't charge them any VAT on the supply. However, and this is where a lot of companies go wrong, although you do not charge VAT, you must report the transaction. You must say to Germany that you had goods leave Germany and go into Spain. To do that, you need to have a German VAT registration, okay? Otherwise, what you will report, well, not report if you don't have a VAT number, and what your business buyer will report will not match, and it will get flagged up one way or another. And we see these cases where clients just get letters saying, hey, we think you've engaged in this transaction. Do you have a VAT number? Doesn't happen all the time. I don't want to scare you, but it does happen. So if you're engaging in these supplies, you will need to have a VAT registration. That's for sure. The question is where, and that will just depend on where the dispatch happens. Now, intra-community acquisitions of goods, essentially, this is the mirror transaction to the supply of goods. Okay, so as a supplier, if you're selling the goods, you'll be engaging in intra-community supply of goods. But if you're the buyer in this case, so you're buying from another business where the goods go from one EU country to another, you are then engaging in the acquisition of the goods because you're acquiring, you are purchasing the goods. Okay. Once again, there's no VAT on these transactions, but it's very important that the transaction is still reported on both ends by the supplier and by the buyer. The whole point here, once again, is just a reporting exercise. It's just to make sure that everyone is doing the right thing. And once again, if the buyer doesn't report the same thing as the supplier, it tends to get flagged up at some point. It may take a couple of years, to be completely honest with you, but it does tend to get flagged up. So very important that you're invoicing your VAT registrations. All of that is handled with care, and that you keep records, of course, of everything. And once again, as I've mentioned already, it's important to note that movement of your own inventory between 2 EU member states also constitutes as an intra-community supply and acquisition of goods, because these are B2B transactions. It's just that you're supplying from your German VAT number to your Spanish VAT number, okay? So let me just have a quick sip of water. So what happens if you're actually selling to business buyers in the EU, but you're importing the goods, right? So the goods are, let's say, in the UK at the point of sale when the order is accepted. Well, really, there's 2 taxable events to consider, and you need to consider both. So the first event to consider is importation. So what happens at the local border? So for example, you get an order from a French business buyer. The goods are in the UK at the point of sale, and you ship them to France. So at the importation, once again, you need to understand who's the importer of record. And this will just depend on the commercial agreement between you and your buyer. Is it DDP? Is it DAP? Those are typically the 2 Incoterms that we see here. The reason why you need to understand who's the importer of record is because this person, the importer of record, will be responsible for the import VAT and import duties, if applicable, that will be charged at the EU border, okay? And in some cases as well, you want to understand, okay, well, if I want to be the import of record because it's DDP Incoterm, do I have to pay the import VAT and then try to reclaim it? Or are there postponed VAT accounting schemes available? Some countries do have them. UK, I would say, is the best one because it's just so easy to use. But postponed VAT accounting schemes are available in the EU. It's just that, once again, every country will implement it slightly differently. But I've got a slide on that coming up, don't worry. So as I said, the first event is the importation. What happens there? Who's the importer of record? If I'm the importer of record, do I have to pay import VAT? All of these questions to be asking. The second event is the supply of the goods. So this is where you don't have to think about it. Okay, well, if I'm the importer of record, once the goods clear customs in France, do they stay within France? So are we looking at a domestic B2B supply of goods, or do they go to a buyer in Germany? Are we looking at an intra-community supply of goods? Depending on which of the 2 cases we're looking at, that will also help you determine whether a VAT registration is required or whether the registration is not required in the country where you're importing into, okay? So once again, I know it's quite a lot to think about, but we can help with all of these questions if you're unsure. So last slide, I believe, on B2B before we look at VAT reclaims is chain transactions and triangulation. A very popular question out there that we get asked a lot. So essentially, what is a chain transaction? It's a transaction that involves 3 or more businesses, and we've seen chain transactions that involve 6 different businesses, which quite frankly get really, really complex and typically do need to be looked at by our consultancy team just because of the pure complexity and the different parties involved. But essentially, triangulation is the most common type of a chain transaction we see. And what happens in a triangulation, just think of it as a little triangle, right? You've got the supplier who supplies the goods, you've got the middleman who kind of acts as the intermediary, and we have the customer who's the final buyer. With triangulation, for this to work, what's really, really important is that all three businesses acting in this chain transaction must be registered for EU VAT, and they must be registered in 3 different EU member states. Okay, so you have 3 parties, 3 different member states, 3 different VAT numbers. If that's not the case, because perhaps yourself and your business customer both have a VAT number in France, it's then a chain transaction, like a pure chain transaction, not triangulation. So the reporting would work differently. So you then need to just make sure that you're invoicing and accounting for the transaction in a slightly different way. Once again, if you're engaged in these, you're not sure how to do it, get in touch, and our consultancy team can definitely have a look depending on the country and the kind of finer details. As I said, these transactions are very, very complex, so we would always recommend to seek professional advice. Sometimes it can be just a quick call. Other times we may need to dig into a little bit more, especially with triangulations. Every EU member state will have slightly different rules on the conditions to allow the simplification to work. So, it's much better to just have that little expert look at the beginning, make sure you've set it all up, then kind of not really do it the right way, and then you accidentally end up with an audit on your hands, which can be very costly and time consuming for everyone, of course. Okay, so really quickly, EU VAT reclaims. This is, of course, a question that we get all the time. Clients go, hey, Michaela, I've paid this import VAT. How do I get it back? Well, typically there's ways to get it back. It's just a question of which of the ways is suitable for me, and have you paid the VAT in the right way? That's also a very key question to consider. Sometimes what you end up paying to your supplier may not have been charged correctly. Anyways, we're going to start with the importation of goods again, because that's kind of the most common one that I come across on a daily basis. So as I've said again, there's now a hard border between the UK and the EU. But similarly, if you're bringing your goods into Germany from US, China, Vietnam, once again, you have to import them before you can sell them, but you have to go through that procedure. So, of course, all imported commercial goods are subject to importing procedures. Typically, import VAT and import duties will be due, but of course, there's other things to consider, like the whole country of origin. So make sure you look into that as well. It's not just the VAT, it's not just this, it all comes together like puzzles, I guess. Once the goods are cleared for customs, they are in free circulation and, of course, can be moved, stored, or sold in the EU. As we said, importation of goods is subject to VAT, and that's payable at the time the goods are imported. So that's your import VAT, which is not the same as your supply VAT. There are 2 different things. We have the import with the import VAT, and then we've got the actual supply of goods where the supply VAT may or may not be due. If you're acting as the importer of record, of course, you will be liable for the customs clearance and paying the customs debt. Of course, you may engage a company. Well, you will definitely engage someone like FedEx, DHL to, of course, do the customs clearance, do the paperwork on your behalf. But, if you still own the goods at that point, you're liable as well for everything that goes on that customs paperwork and all the VAT requirements that may be triggered. If you are the importer of record and you are paying import VAT, typically, you can always reclaim the import VAT. Import VAT isn't designed to be a burden to a business. I certainly appreciate that it may feel like that sometimes. It's more of a security measure. It's being charged to make sure that the businesses who are importing are doing the right thing. If you've imported your goods and you have the right VAT registration, or even if you're not required to be registered for VAT, there is a special scheme available. So you're able to reclaim it. The reason why, or at least the way I like to think about it is, if you have a, let's say, company from US import their goods into the EU, they don't know what they're doing. They don't have a VAT registration. By not being able to reclaim that import VAT, the tax authorities are getting at least something that they are due. Okay, they'll still want the taxpayer to be registered, but if they can't get hold of them, it all goes wrong. They are at least getting something. So try to think of it, if you're getting a bit frustrated with it, try to think of it as a security measure. May not help, but you know, it helps me to think about it. So you can have a think. Okay, so when importing, what are some of the important considerations to make? So as I said, typically, if you're importing the goods and your importer record, you will have to pay the import VAT at the border, and then you're able to reclaim it at a later stage. However, some countries in the EU do offer postponed VAT accounting schemes, and these can have a really, really great impact on your cash flow, of course, but every country will implement this differently. So France, for example, offers mandatory postponed VAT accounting scheme. So if you're importing into France, all of your imports should be handled through the PVA. You should not have to pay import VAT at all because it's the scheme is used mandatory. In the Netherlands, it's an optional scheme, so you can opt in. But if you want to use the PVA, you have to basically apply for the license. It's a separate license in addition to the VAT registration. And you also have to appoint a fiscal representative and set up a bank guarantee of minimum 5,000 euros. So that's quite a lot of money to have tied up in the importing license. So typically, I would say it's a great scheme, but typically for businesses who have quite a large volume of imports going into the Netherlands, I don't think it's always right for every business from the start. Belgium also offers an optional scheme for the PVA. But the good thing about Belgium is that fiscal representation and bank guarantees are not required for UK businesses because there's a certain exemption in place. So that Belgium could be a really good option for you guys to consider. But, you know, it'll also depend on the carrier that you're working with. Are they able to import into Belgium? In my experience, Netherlands tends to be a little bit more well-established or better established in terms of importing routes and what's possible. Okay, purchasing your goods in the EU. So once again, we get these questions quite a lot, you know, something along the lines, hi, Michaela, I got charged VAT from my Italian supplier. How do I get it back? Well, we need to consider what type of purchase have you engaged in? So have you purchased the goods domestically? So, you know, like the goods stayed in Italy after you purchased them from your Italian supplier? Or did you engage in an intra-community purchase or that intra-community acquisition? So maybe you have your goods in Germany, but you've purchased them from a Spanish supplier. They sent the goods from Spain to Germany. This would be an example of an intra-community purchase. In most cases, you will be required to have an EU VAT registration in order to purchase goods from your suppliers, especially if you are engaging in those cross-border EU purchases. Okay. Now, when you're engaging in domestic purchases, so maybe you have that German warehouse, but you've purchased the goods from a German supplier, whether or not they will charge you VAT, or well, whether they should charge you VAT will just depend on a couple of things. So once again, what's the location of the goods at the time of purchase? What's the location of final delivery? Who's your supplier? Are they a German business or are they a US business who just has, you know, some sort of manufacturing facility in Germany? And any EU VAT registrations you may hold. So once again, you know, there's a few considerations here that you need to be making. It's not always a very straightforward answer, but we can definitely always get to the answer. It's just sometimes it takes a little bit more time. As I said, in most cases, if you are being charged VAT on your purchases, just like on your imports, this should not be a burden to you and you have the right to deduction. As long as the VAT was charged to you correctly and you have the correct documentation to support the purchase. So this would be an invoice. We have seen cases where we had UK customers get charged VAT in, I don't know, Poland, but unfortunately their supplier didn't know the rules. They charged them Polish VAT when they should not have charged them VAT. And the Polish tax authorities will not refund this. They will ask you to speak to your supplier to credit you to amend the paperwork. Okay, so we need to make sure you've got the correct documentation to support the reclaim. We can only reclaim the VAT if you are entitled to the deduction. And lastly, I believe, so I've mentioned if you are being charged import VAT or purchase VAT, typically you have the right to deduct. In most cases, this will happen through a VAT registration. So importing into Germany because you want to have your goods stored there, you would reclaim the import VAT through your German VAT registration. However, there will be certain cases where as a non-EU business, you are trading in the EU, but you're not actually required to have a VAT registration in that country, okay? So maybe you are only purchasing goods in France and then selling those goods to business buyers within France. In this very specific example, you, depending on who your supplier is, you may not be required to have a French VAT registration. In that case, if you are being charged any French VAT for whatever reason, it may be possible for you to engage in what we call the 13 directive reclaim process. So this is an annual reclaim process available to non-EU businesses where you're not required to have the VAT registration and you can reclaim the input VAT, so the VAT you're being charged as a business with the French or, the EU tax office. Once again, the slight issue with the 13 directive, as I've said about 5 times today already, is that every country will have slightly different rules on whether the 13 directive is allowed. Is it allowed for UK businesses? Do you need that bank account? Do you need that representative? What can you actually reclaim? Are there any limits? So it can get a little bit more complicated. So once again, if you do think that perhaps this is something that you should be engaging in as a business, feel free to book a free consultation and we can start that conversation to help you understand what your options are. And as I said, all these consultations is just to help us get the conversation going. It's non-committal. It's just to help you figure out what sort of requirements you are looking at. Oh, no, sorry, one more slide and then I'll be quiet for at least a few minutes. So charging the correct VAT rate, as we said, especially with the B2C supplies, it is very crucial that you are charging at destination. So you know where your consumers are located, where the products are going to, and more importantly, you know the correct VAT rate. The reason why I just wanted to bring this slide into the presentation, sometimes, especially if your products are 0 rated in the UK or they're reduced rated, it's very easy to make the assumption, oh, well, it's 0 rated in the UK, so it's 0 rated in the EU. I don't need to do anything. Unfortunately, it doesn't work like that. Every EU member state will have the standard VAT rate, just like we do in the UK. So these typically range from 17% to 27%, I believe is the highest one. And a lot of EU member states will also allow for the use of reduced VAT rates. However, what can be reduced rated is very different. A lot of EU countries don't really also offer the 0 rating like we do in the UK. I think UK is very general in that regard. So it's always very important that you know what VAT rates you are charging based on the products that you are selling. If you're ever in doubt, the best thing to do is just to charge the standard VAT rate, which, yes, it will, of course, eat into your margin a bit more, but at least you're safe. No tax office is going to argue with you if you collect and remit 19% rather than 9%. If you think your products do apply for reduced rating or even 0 rating in the EU, I would recommend getting that checked on a local level with every tax authority directly, because sometimes you may also have a think about what's in the product, what ingredients, what's the ratio of this and that. But yeah, I've also linked in there, because you'll get a copy of the slides, a link to our free VAT rate guide. So that gives you a table of all the different VAT rates available per country, which may be quite a handy resource for your B2C supplies. And yeah, that's everything from me. So thank you so much. I hope you're still with us. I hope you haven't melted away. But yeah, let's just see if we've got any questions. I'll just stop my recording as well.
Yeah,
That's
if you don't mind, I'll keep your slide for a
yeah,
few
of course.
more seconds for the people to get it and get your email address. This was more than interesting. I learned a lot. So yeah, we do have questions. I have some questions and I saw some in the Q&A. So let me have a look in the Q&A and see if I'll find it. Here it is. So Somebody asked if a UK company
Mhm,
wants to hold stock in Germany,
mhm,
but the goods will clear customs into the EU in France.
mhm.
Do you need VAT registrations in both countries?
Yeah, so you would need to have the VAT registration in Germany to account for one, the goods coming into Germany, but more importantly for any sales that you have out of Germany. So yeah, the German VAT registration for sure. Of course, if you're holding goods in Germany, you're also looking to sell to consumers for your own website. You may also consider that one-stop shop scheme. It will just depend on exactly how the sales happen, where to whom. But you will also need to have the French VAT registration because you'll be acting, I assume, here as the importer of record into France, and then you'll be moving the goods from France to Germany. So once again, because the goods are being moved from one country to another, you have to report that essentially stock movement, I would say. So you need to have one or two. Um, that's something that we see quite a lot, actually. Sometimes what's worth also thinking about is if you are thinking of importing the goods into kind of through one EU member state, but then the goods are destined for a German warehouse, Netherlands and Belgium, for example, they have special importing schemes where you can appoint a global or limited fiscal representative to essentially clear the goods on your behalf, and then you don't have to have the VAT registration in the Netherlands or Belgium as the country of clearance. You just need to have your German VAT registration. We don't offer that service, so I only know a little bit about it. From what I've heard, it can be quite an expensive service because essentially you don't need to have your own VAT registration. But it may also be something to consider if perhaps, getting two registrations is a little bit too much than you've budgeted at the very beginning of your expansion journey.
That's great. Thank you very much. I've got another one that I find quite is a real life scenario.
Mhm,
So I own a small medium company dealing mostly with United Kingdom, but I
mhm,
have a customer in France that it's also a small company and they do not want to deal with customs at all. So they want me to sell to France
mhm.
DDP.
Yeah.
How can I sell DDP to another company in France?
Yeah, so it's definitely possible. And no, it's a good question. We get it all the time because obviously I've told you several times that, it's a commercial agreement, you agree with your customer, but sometimes these EU customers are a bit stubborn. And if you want to sell to them, you kind of have to do what they want you to do. And
Mhm.
sometimes the DDP Incoterm is exactly what they want, so they don't have to deal with it. So in this case, in France, if you want to ship from UK to French buyer DDP, you would need to have the French VAT registration. Now, it's a bit annoying, and I fully agree with all of you who will think this, because the rules in France basically state that even if you get the VAT registration, you don't have to charge VAT to your French customer. They will self-account for it, just like they would with all of their other suppliers. But because France uses that mandatory postman VAT accounting, that's what triggers the VAT registration here. So as a UK business, if you wanted to trade with a French buyer, DDP, goods going straight from UK to France, you'd need to have that French VAT registration, really for reporting purposes, to be quite frank with you. So it may just be worth also having a think, okay, well, is it a one-off transaction? Is it really worth the costs and efforts of going through that whole exercise? But yeah, so that would be the case in France. But if the buyer was located in Germany or Netherlands, the goods go from UK to Germany, Netherlands, my answer will be different. So just keep that in mind.
So it depends on the
The
country
country.
of the buyer.
Yeah, it depends on the country of the buyer and also just making sure we have a clear understanding of the flow of goods. So if the goods go from UK to Germany, that's one thing. But if they are, I think as kind of the first question said, they are being imported into France, then they go to the buyer in Germany, then that's a slightly different answer there as well.
Oh, to make it even more
I know.
complicated, I've
If
got
I
another
need you to
scenario that
simplify
is
it and then I just, sorry, go
I've
ahead.
got another scenario that is happening quite a lot, and we receive a lot of inquiries about this.
Mhm,
So the same scenario, half of the scenario like now, the buyer requires for no, it's buying from us from France, but
Mhm.
our manufacturing company, it's, let's say, in Italy. They are doing some very nice electrical stuff. So we
Mhm.
are selling to France,
Yeah,
buying from our supplier from Italy,
yeah,
and delivering directly to France from our supplier to France. This is a common
yeah.
triangulation. Can you enlighten us? And I think this will be the last question.
Yeah, exactly. So this really, it would have been a triangulation before Brexit because you
Yes,
could have used your GB VAT number for triangulation. But of course, yeah, in this example, if you're UK business, you do not have any EU VAT number, you can't use triangulation
of
unless
course.
you get registered somewhere. But then again, no tax office will give you a VAT number just because you want to use triangulation. I'm saying it because we get it all the time. You need to have a reason for the VAT registration. So in this case, where I'm assuming it's a B2B transaction, goods are in Italy, they go into France, we would, technically speaking, you could obtain a VAT registration either in Italy or in France. The most kind of commonly observed kind of, I guess, procedure is to get the VAT registration in the country of dispatch. So this would be Italy because that's where the goods are leaving from. But sometimes Italy can be a bit difficult to deal with from VAT purposes. So in some cases, you could consider the French VAT registration instead. We just need to then report the transactions in a slightly different way to how we would report the transactions if you had an Italian VAT number. But the simple answer is you will need to have a VAT registration either in Italy or in France.
So if we don't have it, will that mean that we will end up paying the VAT in Italy?
So there's two things to consider. So first of all, yes, you will be charged Italian VAT by your supplier, and you won't be able to deduct it at all. And then the second thing, you are still engaging in intra-community supply of goods because you are still supplying goods that are being shipped from Italy to a buyer in France. So you are still required to be able to report those transactions through a VAT
Yeah.
registration. So if the tax authorities somehow, checked this transaction, they would hold you liable for the registration, even if there was no VAT to report. But yeah, you would definitely be losing money on the VAT from your supplier.
Right. So people, make sure that you ask the experts because
Well, even for us, sometimes it's not always as simple as we'd like it to be. So I fully understand the headache. But yeah, hopefully we can help where we can.
for me, it's quite amazing that you are still having the power to smile after after saying so many things about VAT in 1 hour. So thank you very much, Michaela, for telling us all of those things, and I learned a lot today.
Of
Just to
course.
let everybody know that we will make the presentation available, so we will send an email with the presentation, and also the recording will be available on our webpage, hopefully today or tomorrow. On 22nd of July, we have another, it's not a webinar, it's basically a few experts, this time in non-preferential origin, will answer your questions. So we'll have 10 minutes sessions. It's something new that we're gonna start from now on, once, twice a month. So it's similar with what we had today, but instead of a presentation, we will only have the one-to-one meetings. And watch the space, because in September we are planning to have another event inviting some specialists in some other fields. So as you've got used to us, we have the best experts in United Kingdom when it's about topics of interest like VAT or CBAM or all the other uh, topics that are burning right now. This is our webpage and an email where you can find us. What I can say is thank you very much, Michaela. Thank you to everyone that stayed with us. And I feel the smell of smoke from brains right now, to be honest, from so many people. Thank you very much, and see you soon at the next webinar. Thank you.
Thanks for having me. Bye.
Thank you.